couple of weeks ago, I did a video on why I invested in Tesla shares, renewable and physical silver. As you remember, I brought up a chart that looks like this, showing that the return on shares, US shares, was very good, as well as gold, and the property return in Brisbane and all capital cities is not so good in comparison. Now, I need to make a couple of corrections here. I only started buying gold end of November last year, only a little bit, and I only bought like 3 shares in Tesla back in end of March. Now, they've all done very well, but I'm also very wary because with shares, for example, because if you can look at the long-term outlook in shares, this is going back 40 years, goes up, comes down, goes up, comes down, goes up, and then it's on its way down as well. So if you have invested here, you would have 10 years later, you're back to where you started. So it's very volatile, and I learned a good lesson from my dad. He invested very heavily in shares and in a very good company as well, and a loss equivalent of $1 million. And what happened was the company was very successful, doing very well. One of these good company that's going up. But one of the director was very dishonest, and he set up a sister company that did trading with. And obviously he owned the sister company, and the profit has all gone out to that sister company. And as a result, the parent company collapsed, and he lost everything. So shares can go down to zero. That's why I'm very, very wary. Now, I have been investing more in property for the last 20 years. Like, why do we actually invest? We know that from my video on this lesson from a money tree, we do need to save, a portion of our salary, so that if we have a time when we can't work, due to, say, illness 19 or illness 20, for 6 months, a year, we have some saving to live on. And also, if you have a daughter that really want to do medicine and can't get into the government university, and one day come to you and say, "Oh, I've just been accepted into the private university, Bonn, and the fees is going to cost $360,000 over 4.5 years." You don't want to be saying, "Oh, I'm sorry, I can't afford it," and you don't want to see me selling both of my kidney to pay for your school fees. So we need to prepare, and if we can make our investment or saving works for us, that it could actually pay for those school fees. The other correction I want to make is in that video, I did mention that the inflation was 41.48% over that 10-year period. Now, that figure is actually over 20 years. So what does that mean when we say a devaluation of 41.48% over 20 years? So what that means is if you have $100 back in the year 2000 and you did nothing with it, you just put it under your bed, now if you take it out, you've lost 41.48% of the buying power. You can only buy 59 something dollars worth of goods 20 years later. So that's what inflation does to your savings. So if you put your money in the bank and get an average of, say, 1.5% return per year, you're actually going backwards, because inflation is running at between 3 and 4%. So that's why we invest in an asset that is a growing asset. And also the other thing is, especially if you are renting, if you're renting a house paying $500 rent, you are in fact helping the landlord paying off their property. See, if the property is worth $500,000 at the low interest rate now, say 2%, the interest payment for that property is only $200 per week, $10,000 a year, right? At 2%. So if you're paying $500 a week, it doesn't make sense, because the other $300 could actually help to pay off your house. If you're renting, there's never been a better time to buy your own home for a number of reasons. One of them is that there's no stamp duty for your first home. So if you have a look here, 0. But if you are buying your second home, but not your very first home, it's $4,500. But if you're investing, it's $11,000. That's just the stamp duty. So what I would advise is buy a house, not a unit or townhouse, because those are oversupplied. And also right now, it's never been a better time to buy because the interest rate is so low. If you have a look here, you are getting interest rate down to 2.19%. And the other thing is, I was just looking at the sales or auction and result and clearance rate last week. There's a house that was sold in Alex Hill, which is only down the road from me, for $380,000. And this is a nice home with a big yard. Let's have a look inside. It's a brick house, $380,000. Have a look, big entertainment area, big yard, nice size bedroom, pretty modern as well, and close to a shopping center. You could practically walk there. So let's have a look at what the average price is. Just remembering it sold for $380. Medium house price is $460, but $425 for a 3-bedroom. So $425 minus 10% is $380,000. So it's actually selling for 10% discount at this point in time. So 10% of that is $382,500, so $380, and the rent is $420. $420, and this area is in high demand. Have a look here. It's average in Brisbane, that many visits per property. Here, 493. 20, yeah, and you know it's a great suburb. But if you have a look here, this is last year median price, $460,000. Obviously, combination of 3 and 4 bedroom, and that $380,000 was a 3-bedroom. Annual return 5%. So remembering that's 5%, but the interest rate is 2.19%. So why rent when you can buy a house? See, if you look at what you got to pay, 10% deposit. All you need is a 10% deposit, and the monthly repayment is that much, $568.79. So times 12 divided by 52, it's 100 and, is that right? 568.79 times 12 divided by 52 is $131 per week in repayment. Like, why in the world would you rent the house for $420 when you can own it paying $131 a week? I mean, interest rate has never been that low. And what's so good about these is not only you need only 10%, you can actually have a 100% offset account, which means your wages or your income can go into this account, which effectively what is in that account reduce your principal, reduce the amount owing of your loan. And if you are a medical doctor, dentist, or a vet, BOQ specialists will actually lend you the deposit. If you don't have the 10% deposit, they will actually lend you the 10% deposit at a higher rate, obviously, which you can pay it off quickly. And this has never been a better time to get into your own property with this low interest rate. The other thing is, the reason why this house sold for so cheap, there's a couple of reasons, and this is how I like to buy my property. It's either a divorce case situation where they want to get out in a hurry, could be what I call a distress seller. So it could be a bank mortgagee sale, a deceased estate, or they're in a bit of financial trouble. With current situation now, a lot of people are forced to sell, and they are happy to take a 10% discount, on the average selling price in the suburb. And so this is where you can go in and pick up a good bargain. At this point in time, it's amazing. Sometimes the property could be a bit run down, which you can also pick it up and, spend a bit of money renovating it. So you actually then make your profit when you're buying the property. In fact, what happened is, if you buy these, and obviously if the property market is not going further down, you could actually have it revalue and potentially value at 10% more. It's incredible. So you actually make 10% of these. You've actually made $42,000 buying this property at that price. From a distressed seller. Yeah, so there's a lot of potential, and there's very good reason why one should, buy a place to live rather than rent. It's a no-brainer. So I hope you find this video useful. I'll see you in the next one.